averages. Here's your exponential moving averages on Kroger. So just as an update for those watching the recording, we're moving the stop down on Kroger officially in our official swing trade to 29.76. Stop right above those wicks. Granted, yes, the 20 EMA is right here, and we do need to hit the 20 again before we roll down lower. I'm really okay with moving that stop down semi-aggressively because they did have a buyout rumor with Whole Foods, which we'll look at in just a second. They had a buyout rumor with Whole Foods, and I don't want this thing to move really, really large against us since we are profitable on the trade. Speaking of Whole Foods, let's go ahead and look at it really quick. Ticker symbol WFM. And a few traders were looking at Whole Foods today. My friends, today looks like the retest of that double bottom. Here's the double bottom right there. Big close above the neckline, and we are here. We are retesting that neckline right now. So I was mentioning earlier today, if you're looking at getting in bullish, today is pretty much the day to be watching that. If you want to watch it on an hourly time frame, here's what you got. If you're just buying now, so you're saying, okay, it's retesting, I'm going to get in, and your stop is either here or here or here or here, or most aggressively there, which is approximately $28.51, something like that. That would be the most aggressive stop, but really anything below there would also be adequate. So just kind of keep that in mind. It is at a double bottom right now. Of course, it doesn't have to move bullish, but it always could. A lot of traders in this $26 put sale for October. That's expiring not this Friday, but 2 Fridays from now on Whole Foods. Other trades, we did get stopped out on a few trades today, actually, which was weird because the market was relatively bullish, and we do have some bullish positions out there. But yeah, didn't really happen for us today. So GoPro, we got stopped out of GoPro. Our stop on GoPro, we did end up moving it up. We had it to right about there, and we got stopped out today for about a half an hour loss on GoPro. And then we lost a full R on ROK, Rockwell Automation. Happy to be out of that one. Great trade, just didn't work, right? That happens. How can I delete that? Interesting, okay. Give me 1 second. Let me see if I can click this and see if I can press delete. Okay, that works. So backspace doesn't work on a PC, but delete works. All right. So Rockwell, got stopped out of Rockwell, and LN. We got stopped out of LN, Line Corporation. So those are 3 bullish swing trades we did get stopped out of today. Which was, again, a little weird because the market's slightly bullish, but we got stopped out of a lot of bullish trades. Kroger doing its thing. Ralph Lauren, ticker symbol RL, we were still in 104.88, hoping that we get there at some point. Not quite. And we're going to exit a quarter of that position off there. This is the trade, though. If this trade works, it's going to make up for GoPro, Rockwell, and Line Corporation. Right, this trade can really start cranking it out because really we're already at 2R. 2R is right here from this trade setup. So I'm trying to hold it until here and then until about 109 is my next target, somewhere right around there. So if this trade can work, this will be a 3R plus swing trade that we'll end up being pretty patient on, hopefully, but it looks pretty good. Karen says, it was a very strange day. Market internals were weak all day, but the indices were surprisingly resilient. Yes, literally couldn't say it better myself, Karen. You're absolutely right. It felt weak. All the market felt weak, but there were a few stocks that were very strong, and the indices were strong. So it was a weird day. It was. So that's Ralph Lauren. We also are in Waste Management bearish, ticker symbol WM. That one's just hanging out right now. We did get triggered into American Express bearish at open this morning. So this does have earnings in about a week and a half. So we want this trade to move, and we want to move quickly. So by Friday, which is Finance Friday, we're going to have an exact plan of when to exit this thing. If we even get just 1 hour on it, that's okay. Earnings is in the future. I love the gap. Love everything about the move. We'll see if American Express can kind of roll over. It looks good. And last but not least is GILD, which is still open. Has not triggered yet. I'm going to leave it open for another day or two to see if this trade can retest and hopefully do something like this. Something like that. That's kind of what I'm hoping for. So that's about it. That's pretty much what I got. So really quick disclaimer for the option stuff I'm about to talk about right now. I just want everyone to know, especially if you're here live, I know you're very excited. I'm really excited about this. For the traders listening in the recording, obviously there's no magic pill out there. There's nothing that I can give you that goes, here you go, make all the money that you want. You just got to keep that in mind. It's something that I wish I could give you, but we can't. What I did figure out, though, with options is I was able to find out a way and to determine something that has baffled me for a long time when it came to risk. That's something that was really difficult for me, and I didn't totally understand, nor could I visually identify where the risk needed to be when I took an option. So I came up with, and I was working on 2 strategies over the last 6 or 7 months. I'm going to share those with you guys right now. I just need us to understand that there is nothing special here. That here's your silver platter, and you're going to make money. You still have to follow your trading plan. You still have to risk small. You still have to exit. But there are 2 strategies I'll be sharing today and tomorrow that is a really, really awesome implementation of option strategies. Some of you may already know this or use this. It's just new to me. It's not new to me. It's not new, but it's profitable for the first time in a long time, and I'm going to show you why. Okay? So type in a 3 if you're excited. Let's see a bunch of 3s, and then we're going to get this thing rocking and rolling. Yes! All right, and I am recording this, so you guys can watch this as many times as you want. So what I'm going to do is I'm going to hop over to another screen. New share, and I'm going to share with you guys Thinkorswim. Type in a 1 if you can see the Thinkorswim screen. It should be this big black thing. Okay, just want to make sure that that works correctly. Now, this strategy that I'm going to refer to does not only work in Thinkorswim. Interactive Brokers has this, and Options House has this. Those are the only 3 brokers that I have seen use it. However, the caveat is it's really clunky, weird, and ugly in Interactive Brokers, and I don't like it. And it's even worse in Options House. But I know Thinkorswim has it. I've been using it in Thinkorswim. It works really, really well. I'm pretty excited about it. We'll see what it ends up doing. Okay, so just letting you know. Yes, I apologize if you have Scottrade or E-Trade, Charles Schwab. There's a lot of brokers that I do not think can do this. I know that Thinkorswim used to be able to a long time ago, but it was very clunky, and now they've definitely helped it out, and they've gotten a lot better with it. So if you're saying, Jeremy, do I need Thinkorswim for this strategy? No, but you will need a broker, potentially, depending on which strategy you choose. You'll need a broker that you're going to be able to view option chart pricing. Option chart pricing. So let's get started. This right here is a 5-minute chart on Apple, so I'm just going to go ahead and go to the daily chart. So again, this is Thinkorswim. This is just a daily chart. Nothing special here yet. Nothing special. Now, for some of you, you might be better at Thinkorswim than I am, and I will say awesome. Okay, I'm looking forward to learning more with you. I've only been using Thinkorswim now for approximately 5-6 months, give or take. I've practiced it, and I moved money over and actually started trading through it. So I'm not a pro by any level, but I think I've gotten the massive part of it down. Justin Lindemann said, you can see an Options House, but it's basic. Yep, that's correct. So it's not Options Express, Options House, to my knowledge, Okay, so here we go. What we're looking at is a regular chart on Apple. In Thinkorswim, there is a right-hand corner right here that looks like a box, and that's where you can select a different chart. So we're going to go ahead and select 2 charts now. Okay, so we have one chart that is the chart price and one chart that is totally blank. One chart that is blank. So what I'm going to do to this chart is I'm going to click on this little link button. I'm going to link it to a color. Let's do green. So I clicked the chart and I linked it to green. You guys following me so far? Again, I know it's recording, so I'll make sure you guys, anyway, you're tracking with me. So now what we're going to do is we're going to go over here to trade, and we're going to type in a symbol. Whatever symbol, whatever it is you're trading, could be Apple, could be SPY, could be anything. But obviously you have the option of choosing Forex. You can choose futures, currency pairs, or whatever you're trading. You can do all products. This, of course, is options. This is an option chain. So what we're going to do is you're going to go to an option that you're interested in. You're going to go to that option and right-click that option. You're going to come down to where it says Send Apple to. It's the very, very bottom. And it's actually a contract code. That's what this is referred to as a contract code. So this code literally says 161021C116. So what that is AAPL, ticker symbol. 16 is the year of expiration, 10 is the month, and 21 is the day, followed by the letter C or P. C is call, P is put, obviously, followed by a number, which is a strike price. So now you're going to go send to, and you're going to hop over here to green. You're going to click green. If this works appropriately, what we should be getting now is when we go back over to charts, we should be getting the option pricing chart for that exact option. So let's go and do that right now. I'm going to click on charts, and ladies and gentlemen, there we have it. On the right-hand side, this is the actual option pricing chart using candlesticks. So you can see the high, open, low, and close of an option price for whatever expiration you're choosing. And you can base your entry and your analysis using both charts simultaneously. Guys, this is a huge breakthrough for me. The reason I'm saying that is because let's say you want to trade an option and you're saying, okay, I want to know how much I want to buy an option for. So let's hop over to Apple, for example. I'm going to zoom in. So, okay, here's Apple. And let's say that I was looking at this particular trade today, and I was setting up the trade, and I said to myself, all right, here's what I want to do. I want to look at Apple. Apple is gapping up. I want this to be bullish. And when it breaks above the resistance, I want to buy in. So I'm over here on the actual price over here, right there. So I'm doing my analysis on the price chart itself, right? The exact same thing. Nothing different there, folks, right? You're doing your analysis on your price chart just like we always do. So you're saying, okay, here's what I'm looking at. Here's what I want to do. Here's what I got. Here's my plan, so on and so forth. Right? So you're building your trading plan. You're building your strategy. You're building based on what you want to do off of the actual option price. The price chart of Apple. Then you can come over here, and with your crosshair tool, you'll be able to determine, all right, if Apple's breaking above this resistance, I want to get into some calls. How much do I want to pay? Well, I can look at my crosshair in the option chart, and I can move, and I can see, oh, okay, the high of this price was 108. The high of this candle was 108. So if Apple is breaking above this resistance, if I want to get into Apple bullish, I want to buy, and I know exactly what price I want to pay. $1.12 or lower. $1.12 or lower. Because again, that's I'm just hovering my crosshair over. So what you could do is you could easily go and set that trade up just like a normal trade. This is what I want to do, but you have an exact price, you know, to the penny of how much you want to pay for that option. And again, folks, that is a huge deal, especially if you're trading a bigger risk on the contract size. Knowing to the cent how much you want to pay is a huge, huge thing. So if you did a stop limit at $1.12, that would get filled. Now here's where this is also cool. Blaine says TC2000 does this. You can also trade from the charts through Interactive Brokers. Yep, that's absolutely correct. TC2000 does it. Market Analyst does it as well, which is another charting software. So there are a few charting softwares that do pull the options data in. It will put a drag on your computer. If you have a bunch of those up, just, you know, FYI, it can drag it, because this is a lot of data. 3 years ago, when option Thinkorswim had this, the option chains were very slow. They loaded terribly slow, and all that kind of good stuff. So anyway, so this is an option pricing tool, and what we can do from here is we can go to daily. Of course, we can go to a 5-minute chart. So if you're day trading, look at this, folks. You look at a 5-minute time frame on Apple using the candlesticks of the option prices themselves and determine, okay, I want to enter here with a stop right here. So just for giggles, let's go ahead and practice this really quick, because again, this is what I've been doing for a while now, 5-6 months, is determining the price of the option, where I want to put my stop, based on whatever the analysis I've come up with on the actual price chart itself, and determine an entry and a price and calculate my risk accordingly. So over here, let's say we want to get in at 117 with the stop at 91 cents. All right, so 117 with a stop at 91 cents. Let's say we want to do a risk of $450. Let's go ahead and calculate how many contracts we would get in on that by using the exact same analysis. Okay, 117 minus 91 equals 26 cents. Okay, 450 divided by 26 cents equals 1,730 shares, or 18 contracts. 17 or 18 contracts. So when you're taking this trade, your risk, so let's say it would be approximately $1.17. So 17 contracts times $1.17. 17 times $1.17 times 100 is going to be an investment of $1,989. 1989. So here's what's really fun about the option trades, as you guys know, is even if this trade works, boom, 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 for 2R, which it did, even though you're only making $900 on the trade, that's approximately 50% ROI. Pretty awesome. So again, if you did that exact same trade with stock, you got to put up a lot of shares. Now, I've done this before. Again, this is not new, the day trading options thing. What I did not know, until recently at least, was how to calculate this number and how to calculate this number. And I would base it on the stock price, and I get like a rough estimate of it, how many contracts I want to buy. But again, I didn't know really where I should place my stop, so I wasn't very certain on the trade. Didn't know how to exactly, you know, time it. And if you hop over to a 5-minute chart on this Apple thing over here, here's the 5-minute time frame. So here's the 5-minute chart, right? You can see this, the way it breaks out, this nice little pennant pattern, and this breakout. That's 115 by on Apple. If it's a stock trade, great. If it's an option trade, great. But this is a really great way to have a certainty and to know exactly where you want to place your stops. And for me, trading options, that is a massive, massive deal. Really big breakthrough. Not done yet, though. Now, this is just with Thinkorswim. Not just with Thinkorswim. There are a lot of brokers who do this, but it's very simple to do it through Thinkorswim. My favorite functionality is coming in here and doing a buy custom. So what I'm doing right here is I right-click on the screen. Okay, so I right-click with the PC or the Mac, whatever, but this is on a PC. Buy custom OCO bracket. So the stock option comes down here. You can change this to, again, I just did 17. So when I'm trading this, I'm doing this pretty fast. So there's 17. And then here's 17, and then in this oops, all right, one second, why are you doing this? Okay, so in this level I can set up a stop market, stop limit. So I mentioned earlier I want $1.17, so here's $1.17, $1.17, stop 91 cents. and my target of whatever I want it to be. Again, I can look at this chart and determine it, but I can calculate the limit for whatever it is. And ladies and gentlemen, I click confirm and send, and I'm done. Right? I click confirm and send, and the trade is through. It's an OCO order triggering an option trade based on the option price with the stop on the option price with a limit sell on the option price, all in an OCO format. Takes less than 60 seconds to set that up. Once you get really proficient with it, you click it, it's ready to go, and you can walk away from your computer and you can day trade options without being in front of the computer. How cool is this? Oh, I loved it. Such a big deal, but it's so much quicker than Interactive Brokers, I feel like. It was so fast, trading right from the charts, doing your OCO order, that trigger, limit, and stop all at the same time. Destiny said, so would you lose the whole 1984 if we go against you? No, ma'am. So again, the risk on the actual trade, how much you're risking, was $450 in this example, if we did 17 contracts. So that's how much you would lose if you're incorrect. The investment, the amount that you're actually putting into the trade was 1984. What other questions do I have, folks? Amy said, you sound like it's Christmas morning. Yes, I know. I feel like it's Christmas morning. It just makes it so much simpler to day trade or to trade options. MD says, why stop limit? Why not just limit? Because if you want to trigger when a stock breaks through a particular price, right? When you want to break through the particular price. Does that make sense, MD? So if you're like, I want to get in, but not yet. I only want to get in if it breaks through this resistance, so to speak, then you do a stop limit. Now, I'm not done. I'm not even close. If you want to do a limit buy, MD, just like you're mentioning, if you want to do a, hold on. Oh, gosh. Oh, no. Give me 1 second. Okay. Now from here, if you have a limit entry, so you don't have to do stop limit, you could do just limit, right, MD? You come over here to this cogwheel and you click the cogwheel. And the cogwheel does something like this, and it gives you the price at which you can trigger into the trade based on the stock price itself. So if you don't want to do a stop limit, if you don't want to trade the actual trade from the option price itself, but you want to trigger into the option trade only when the stock does XYZ, then you type in Apple method, at or above, at or below, and you just type in whatever price you want. So if Apple is above 116.98, click. Then, okay, so this order is saying, if I confirm and send, to answer Dave's question, it says buy order one description, buy 17 Apple 100, buy 17 Apple calls at 117 limit open. If Apple is above 116.98, then sell OCO to close, OCO to close. There's my max loss on the trade. If I don't use my stop, of course, I just click send and the trade's in. So again, you can do this with Options House. It's a little more clunky. It's not quite as clean. You can do this with Interactive Brokers. There are other trades that you can do this with. But if you want to trade options, the old way is gone. This is the way it needs to be done. You need to be able to trade and see exactly what price it is that you're getting something for, and it's going to help with your risk massively. Richard said, when will you begin using as options, using the method during an AM, PM floors? Wednesday. I'll start doing them more. Because until then, no one really would understand exactly how I get the prices. So that's now how. And I'm also using the method to create the weekly options newsletter as well. MD says, when you buy or sell options for day trading, do you buy or sell weekly or monthly? So we're going to begin to that over the next 2 to 3 days. But it is going to be weeklies. If you're day trading, you're trading the options expiring that week. Richard says, maybe a little slower. I'll do as slow as I can, Richard, but I am recording it. We're going to be doing it today and tomorrow, buddy. Today and tomorrow. So I'm recording the whole session. You can look over the video. We're going to do this again tomorrow. It's great. It's great. It's great. It's great. All right. So let me get to my first really it's my only strategy, I guess, if I use the term strategy. I'm gonna talk about strategies here for just a second, because this is not a strategy. This is just a way to set the trade up. But let's go ahead and talk about the strategy. This is not mine. This strategy has been used for a very, very long time. We're going to talk a lot about the actual specifics more tomorrow. But the best name I can give this, and again, there are probably other names for it. I'm not the creator of this strategy. How do I spell it? Absolute zero. That's what I'm calling it, absolute zero. And here's what the strategy is. When you're taking a trade, when you're taking an option trade, you go and find out what price you want to pay for something. So for example, let's go back over here and let's type in, I don't know, SPY. And I'm going to come out here to regular November expiration, which is November 18. I'm going to come and look at this put, and I'm going to say the 212 put, and I'm going to send that to green, hop over to the chart. Now I got SPY. I'm going to change this to an hourly time frame, change this to SPY right here. So I got SPY over here. I got SPY over here. Talk about absolute zero. So what I can do with this trade right here, this is the right-hand chart of this, is the SPY option pricing for the contract that I selected. The play is, the absolute strategy, the absolute zero strategy, the play is you buy out of the money options. The timing does matter, but I'm going to talk more about timing of these plays tomorrow, because right now you guys are just soaking this in and asking a lot of questions. Most of you guys are being very quiet. Your jaws are on the floor. I can dig that. So we're going to talk more about the timing a little bit tomorrow, okay? But you're going to be buying whatever time frame that you're comfortable with, but what I've been doing recently is approximately 2 to 7 weeks worth of time. The exact opposite of what a lot of you have learned to trade. So I buy 2 to 7 weeks worth of time out of the money, usually 2 or 3 strike prices out of the money, based on, hold on a second, based on analysis. Okay, based on analysis. So I'm not just randomly buying options. I'm like, okay, I think this is going to do this, so I'm going to buy it out of the money 2 to 3 weeks away. 2 to 3 strikes out of the money, 2 to 7 weeks away from where we are right now. And here's what I'm going to do. So let's just go ahead and actually pull up a 2 to 7 week option on SPY so I can show you guys what that looks like. So I'm going to come back into SPY, and let's look at one that's expiring not this Friday, but next Friday. 2 strikes out of the money is approximately 215. I'm going to send this to green. All right. So here's the 216 strike option chain. Absolute zero. Pretty easy to understand. You find what the option price is trading at. So let's say, for example, you want to buy it at $1.08. You take your risk and you divide it by the amount of the option cost. Kim says, this breaks all the rules. I know. It's great. So good. I'm going to talk about why, Kim. Because, yeah, it does break a lot of the rules. A lot of the option buyers, it does break the rules. So let's say your risk is $450. Again, Cheryl and Destiny, that means that if you lose on this trade, you're going to lose $450. This is your 1R. If you take $450 and you divide it by 108, what are you going to get? 416 shares, AKA you could buy 4 contracts at $1.08 or lower. $1.08 or lower. So let's say you wanted to do 4 contracts, you bought it at $1.08. Ladies and gentlemen, I know this is going to be a scary question, but what is the worst thing an option can do? What's the worst thing an option can do when you buy it? I need to know, though. Daniel, nailed it. It can go to absolute zero. That's the worst thing it can do. Putting the stock is not the worst case scenario. Worst case scenario is it goes to zero. Right? Worst thing in an option is it goes to zero. That's the maximum amount of money you can lose on an option when you buy it is 100%. You guys follow me so far? Those of you who aren't late? If you're late, no big deal. I promise. It's totally fine. I'm recording the whole thing. So the worst you can do is go to zero. I really want that to sink in for a second. The worst it can do is go to zero. So if you take a trade and you say to yourself, all right, here's what I'm going to do is I'm going to buy this at absolute zero based on my risk. If the trade doesn't work, how much worst case scenario can you lose? 1R. There's no slippage with this strategy. Yep, you heard it correct. There's no slippage. If you buy an option, there's no way it can go to negative 0.01. So if you get into the trade and you say to yourself, all right, what I'm going to do is I'm going to get into this trade and allow it to trade either to my target or I'm going to give it some time. And if it doesn't, that's not clear enough. If it doesn't trade to my target in, I don't know, 1 to 2 weeks, I'm going to exit for whatever the price is. So you give yourself 1 to 2 weeks or 1 to 2 days or 4 to 6 days. It's a small amount of time, right? Because this is a weekly option. So this is for my advanced traders. This is for my traders who can, I actually shouldn't even say advanced. This is for my traders who have the time and ability to be in front of their computer and place a trade, I don't know, like 5 minutes out of the week. Okay, it's not a very expensive, long, enduring process. Once you do the analysis, you place the trade, you can walk away. Here's what's really cool about this. You don't have to play stops, ladies and gentlemen. Why? Why do you not have to play stops? Yeah, this breaks every rule that a lot of people teach. I get that. That's why it's a cool strategy. Every single rule that most people teach, this is entirely going against it. You don't even have to use stops. Why? Because worst case scenario is going to go to zero. That's what you are expecting it to do in the first place. Right? If it's going to go to zero, cool. No big deal. Whatever. That's fine. So you don't have to worry about getting whipsaw. You don't have to worry about if you place your stop too tight. You can find out what the stock is and buy it all. Here's my disclaimer, my friends. This exact strategy is how I lost $100,316. Was I following my R strategy, yes or no? Oh, I shouldn't say my strategy. I apologize. Not my strategy. Was I following risk mitigation strategies, yes or no? No, of course not. Not even close. Did I know anything about risk mitigation strategies on options? No. Did I play stops? No. Did I know how to mitigate risk? No. Did I know anything that you guys know right now? No. I didn't know any of it. I was an idiot. I was a moron. I was the worst trader ever. I did this exact strategy with all of my money. I put in $100,000 into one option contract numerous times. I had $87,000 swings in minutes. Yeah, so I was an idiot. I get that. Okay? Took me about 3 to 4 months to lose it all. Yep. Now, I did make some money in that time. I don't talk about that very often, but I did make some money. I did pull out enough money to, buy the whole bar round of drinks and do what stupid 21-year-olds do. I was 21 years old. I was a moron. Or as Ron Burgundy, no, not Ron Burgundy. The guy from Wedding Crashers. What an idiot! Right? I'm making fun of myself, so I can make fun of myself. I'm allowed to do that. I was not smart. I do not want you to do this. Type in a 1 if you guys can all be like, okay, cool, I'm not doing that. I do not want you to take all of your money and risk in a trade. That's not what I'm saying. What I'm saying is if you can slowly control your risk and mathematically control, again, if you lose 450, lose 450, lose 450, and then the next trade's a home run, boom, $1,500, you're at least at break even. But if you can lower the risk from there to there to there, right? If you do an absolute zero strategy and you bail when you're down to 300 because the trade didn't do what you wanted to do, you're down to 200, and then you lose, let's just say all 450 on that trade, okay? Then now you're profitable just controlling your risk, but you're only a 25% trader. So risk your R, folks. Know what amount you're willing to lose. That's what I'm saying. That's what I'm getting at. But the reason this is a fun strategy is because you don't have to play stops. You know exactly how much you're willing to lose. This strategy does require what I refer to as a time stop, or you telling yourself in your plan how long you plan on holding. You guys now know why I waited for the free week for this to teach this, right? I didn't want to give just everyone in the world this information, at least not yet, because options are very, very powerful tools, and they can go wild. So you've got to know how long you're going to be in this trade. So type in a 6 if you've heard me say, if the trade doesn't do this by this, I'm doing this. Right? That's a time stop. And the reason I'm doing a time stop is because options go down over time. So I want to be in and out if the trade doesn't work. I want to say, do this, and if it doesn't, then I'm out. So you've got to have that time stop, and then you just simply follow it. That part's easy, right? Right? It's so simple. It kind of is, though, once you get used to it, but you just have to follow your time stop. Amy said, how much would you say this affected your day trading option strategy for the positive? Massively, hugely, unequivocally, amazing. Comparatively, I made more money this year trading than I have. I'm trying to give you an exact number. I don't know. A lot. I'm trying to compare it to, it's a great question. I'm trying to compare it. I made like 70 grand, give or take, over the last few months, which is a big deal for me. And yeah, it's good. So there you go. Comparative that to everything else, it's about double in the amount of time that I've taken to trade everything else. So, you know, right about there. Because really the first 2 years, the reason I'm thinking about the first 2 years, I was terrible. And then I'm not even going to talk about year 3 through 6 or 3 through 5 because it was just really boring and made like $30 a week or something. It was terrible. But anyway, yeah, this has helped exponentially. This is a really, really, really big help. And it can be done with smaller accounts. You know, if you have a $1,000 account, you can do this trade strategy with a $1,000. Anything lower than 10, if you do have a smaller account, I will say if you're doing this strategy, I know 1 to 2% is a great risk, but when you're trading smaller accounts, you will mathematically have to have a little bit bigger of an R unit when you're trading a smaller account. In this situation, smaller account is anything under 10 grand. Okay, so if you have anything under 10 grand, I would say look for something in the range of 5%, maybe a little bit more, 5 to 10%. Because you're trading $1,000, 1% of $1,000 is $10. So it's really hard to mitigate risk appropriately with $1,000. Obviously, $1,000 is not going to make or break any one of us here. But if you're trading $1,000, you're probably going to want to risk $100 or $200 per trade, and more or less just hope you get one right pretty soon. You know, because again, that's a small amount of money, and unless you're going to just grind away and make $10 per trade, commissions alone are going to eat you up. So that's the only reason I'm saying if it's a very, very small account, you either have one of two things: either don't trade it, or you have to be a little bit more aggressive with it. I can triple a $1,000 account in like 3 days. So I'm not saying just because I can do it, you can do it, but it's not difficult if you know the risk on the trade. Just kind of keep in mind that with a smaller amount of money, you do have to risk different amounts of money. Does that make sense? You guys getting that so far? So anyway, if you have a smaller account, this strategy absolutely works for you. You're going to have to maybe risk more than 1 to 2% if you're dealing with a smaller account. All right, cool. That's what I got. But again, still know what your risk is and still be smart about it and keep track of it. All that good stuff. All right, what's next? What's next? What's next? Now there's a lot of questions here. Daniel says, if you trade less than 10 options with TD Ameritrade, you can get a discounted commissions. If you sign up for Doe, it ends up being $150 per contract, but without the $10 trade fee. That's fantastic, Daniel. Great message. Thanks for sharing that. That's really good. I'm glad you shared that with everyone. It's very good to know. Okay, so yeah, you're gonna have to be good on this trade. You know, you have to be good at this strategy, good at mitigating risk. But absolute zero can be a fun strategy, and here's why. Here's why. Another reason: if you're using the absolute strategy zero, how often do you think I lose a full R on absolute zero? How often do you think I lose a full R using this particular strategy? Rarely. Maybe like 1 out of 10. If I buy something really, really cheap, like 20 cent, if it's a 20 cent day trade or something, 10-cent day trade, I'm like, okay, cool. I'm going to hold this trade all week. I don't care if it goes to zero. Sure. All right, then I'm going to lose a full R. But, I mean, think about, I want you guys to comprehend this. If you buy a 20-cent option and you're day trading it, and you're risking 1 R on that day trade, how quickly could you make 5 R? I mean, just think about the number for a quick second. You buy an option on Thursday, Wednesday, or Friday on Apple, and you're risking 20 cents. And you're willing for it to go to zero. First of all, you're not going to get any slippage, which is a huge deal. Because, guys, I risk 20 cents on stocks all the time and get slippage relatively often. If I'm risking 20 cents, you can guarantee that you're not going to get any slippage. If Apple moves $1 in your favor, however, that option is going to be worth approximately 60, 70 cents at minimum, depending on what strike you purchase. If it's in your favor, if that thing goes in the money, you're talking about $1. So you have a 5R trade if the stock moves 1 point into the money. At that point, it becomes intrinsic value. 5R. You guys get what I'm saying? And what if something really cool happens, like it moves 2 points or 3 points? That has happened to me before. That's also not common. Okay? That's also not common. But it has happened, like on Netflix. Netflix earnings Friday, long time ago, year and a half ago, whatever. Bought an option for about $1.15, was willing for it to go to zero, and it went $6 in the money. $6. It's huge. So you never know. But it's all about risk. Rashad says, light bulb just turned on. Sweet. Who else just got one? So you guys get it. It's about risk. That's the point, is if you can know how to control risk on an option, that's what options are for. Now, when you're doing out-of-the-money option trades, again, you got to get in, you got to get out. We've got to understand that because time will slowly tick down. Time moves so slowly, so slowly. I think it's a Madonna song. So we covered getting into the trade. Here's another really interesting thing about absolute zero. What if the trade goes in your favor, my friends? What if the trade goes in your favor? What could you do? You can add to it and raise the stop. Right? If it goes in your favor, if you want, you can add to the trade and raise the stop up. So, for example, let's look at SPY right here. Let's say I was feeling a little bit bearish on SPY. So I'm going to hop over here to an hourly chart, and I'm going to look at SPY, and I'm going to say to myself, how weird, SPY is at a resistance. Who would have thought? So I want to buy a 215 put on SPY, which is about $2 out the money, 1 to 2 strike prices out of the money. Dan says, how do you locate the options you're buying? Are they out of the money? Yes. So as I mentioned earlier, they're out of the money options. 1 to 2, sometimes 2 to 3. And if I took this trade right here, and again, let's just practice this. Let's say that I did I wanted to buy if it broke above $1.20, and I have my stop at absolute zero. Okay, so my stop is zero, $1.20, $450 risk. What are we looking at, folks? $450 risk. What are we looking at? Down, 450 divided by 120. 375 shares. So 375 shares would be either 3 or 4 contracts. So you could do 4 in that scenario. Okay. So stock breaks above 120. Boom, I'm in. Again, my stop was at absolute 0. I'm like, oh man, the trade's working. I'm going to take my stop from 0 and move it up to, oh, I don't know, 80 cents. Can anyone tell me why I would put my stop at 80 cents? Well, because it's below the low of where it was. Just like if this was a regular stock trade, right? Your low is 93 cents. So I do give the options a little bit of wiggle room because of theta and things like that. You do want to give it a little bit more wiggle room. Like rather than an option, you know, a stock, if you're doing it to the penny, just like I give stocks wiggle rooms, I give option stops wiggle rooms. But let's say the trade's going in my favor. I want to move up the stop to 80 cents, and I can buy more. From there, it's just about simply doing the math. You do the math of add and reduce, and you say, okay, I want to now only lose half of my R. So you get to determine, if you're adding to the position, how much you want to lose on that trade. It's your call now. Whatever it is, it's going to be less than 1R, which is the good thing. And of course, yes, in the event of a gap, you can lose more than your stop, of course. But if you're adding and reducing on the trade, you're limiting your risk. So even if the stock did have a huge gap down, and let's say it gapped down to 70 cents and you got stopped out, maybe instead of losing half an R, you lose 0.7 R or whatever the case is. But either way, you get stopped out on that trade. Right? So that's totally fine. You get stopped out, you lose less than your R. But again, that's why I like about absolute 0. If you never move your stop, that is totally fine. If you do an absolute 0 trade, you never move your stop. Doesn't matter if the stock gaps huge or not. You're not going to lose more than 1R. I think that is so cool. That just jazzes me up. Questions, my friends. We only have a few minutes. Man, that 50 minutes rolled by. Wow. It's already 4:54 Central. What questions do I have, my friends? What questions? Down. So again, we're going to talk a little bit more about this again tomorrow. We're going to talk a little bit more about the time factor. Steven says, how do I recover from you blowing my mind? I don't know, man. You know, take a good sleep and let's do it again tomorrow, because I thought this was amazing. There are other charting softwares and brokers that offer this. But again, my friends, this is all about risk, and the amount of moves that you can get on this stuff is so great. I know you guys know all about options. There's nothing here that changes options. But for me, if I'm doing a channel, guys, absolute 0 strategy becomes like the easiest thing in the world to me. You know how many times I traded that channel on SPY and traded this channel on SPY using absolute 0 method? It was insane. Because right, the stock comes down to a support. I'm like, all right, I'm just going to buy some calls. Don't care if it goes to 0, whatever. Or if it's out of resistance, I'm just going to buy some puts. Don't care if it goes to 0, whatever. Don't care. If I'm wrong, I'm wrong. It'll go down to 0, and I'll lose my 1 risk unit, which I'm totally comfortable in doing anyway. But if it works, make more. Grongo said, when I watch the whole video later, is this going to make sense if I don't know anything about options? No, not quite. But you can email me, and I'll be happy to send you a video on options. Or maybe we can talk about, for my traders who are a little bit newer, we can also talk a little bit more about options on Wednesday, kind of do like a refresher. But I have a lot of basic material on options as well. Dan says, if it can go to 0, can it come back out of 0 also? That's a very good question. The answer is yes, it can. It is very rare, but it can do it. It can. It is only happened to me one time about 4 months ago on BIIB. I'm going to have to come over here to a daily chart. So here's a daily time frame. So back over here, I had bought July week 1 calls up in here somewhere, this Morningstar reversal, expecting a bounce, and on an hourly time frame. And of course, this candle happened, And those options were, they weren't exactly zero, but I think they were 2 or 3 pennies. So yeah, an option can go down very, very quickly. And the cool part about it is once the option is at 0, from there, you've already realized your entire risk. So you can just leave it alone. And if by some miracle, the stock just goes like crazy on Friday and goes into or near the money, you can get out for less than your 1 risk unit. Yeah, so again, it's a very interesting methodology. It's a really good approach at knowing your option pricing tool. This also helps immensely with credit spreads because you can look at the price of individual calls and puts and understand exactly how long, because you can add as many charts as you guys want. If you want to have something that looks like this, obviously I'm sure you guys know that you can link all of these. You can link them to different strategies. You can link them to different option chains. You can link them to just about everything. Down in here, you can do level 2 trading. You can do an active trader. So if you're trading this really quickly, you can just buy. So mine set up for a $100 limit because if I'm day trading. So sometimes you guys are wondering how I can day trade so fast. Come to active trader, just buy, boom, boom. You can just buy and sell these calls, whatever I have here. Whatever's over here, I can buy or sell at just one click of the button, boop, and I'm in. So that's pretty quick. So yeah, I think those are cool. There's a lot of good brokers out there, but really all I wanted to cover today was going under the ability that there are option pricing chains available out there. And if you can go in and figure out the pricing, I do love trading options. I will talk more about this week about I don't take every trade with options, right? So if it's like a random company I've never heard of, I'll probably trade the shares rather than the options. So I don't trade options on everything. You literally can't trade options on everything. So I trade options on, my favorite stocks and whatnot. Lindemann says, if anyone tries typing the option ticker and thinkorswim, you must start with a period or it won't work. Correct. And you can also copy and paste it out of the chat pane, out of this as well. You can click copy right there. Click copy, and you can hop over to your chart and you can paste it in there new if you want. So if you just want to grab a new one and you control V, and there's a new option chain right there for you as an in the money option. So if you want to do it that way, you can also do it that way. Anyway, folks, this is what I got. If you want to ask your brokers if they have them, again, I'm not familiar with all brokers. If you have a different broker, ask them, hey, do you have this application? And if so, where do I find it? And if they go, I don't know what you're talking about, say, how do I get the price? And how can I look at a candlestick chart of the historical options data? Okay, that's what it's called, historical option data or historical option pricing. You can ask them if they have it. I know a lot of them don't. Some of them do. But I do hope this session was helpful, guys. We're going to have more about it this week. And really at the end of this week, we're going to be very fluid going into the next few months into the end of the year with option trading. And since earnings season is right around the corner, folks, this is one of the best times to do this strategy and do this type of trading. So I'm going to be back tomorrow, same time, same place. And until then, remember, love life, live life, and trade it. See you guys later.